Hello, everyone, and welcome to the May 2024 housing market update. I'm Krishna Perkins, your host, and today we're going to be going over local and national real estate news and specifically San Antonio housing market information. Today is May 10th, 2024. So we're going to get started with a few details nationally, and then we'll move into the local San Antonio housing market. Um, it's Mother's Day weekend, so happy Mother's Day to all the mothers. I've got my Grill Master t-shirt on, getting myself in the mood to smoke a brisket. That's one of the requests that my wife had, and so I'm going to get started this afternoon and get that thing going so that we have it ready for Mother's Day on Sunday. So without further ado, our first slide here I want to share with you is inflation. And it continues to exceed target rates. And this is the big reason we haven't seen a large move down in interest rates, if you've been following the news or not. As you can see here, we've had much higher inflation in recent history here at the 8.9% inflation. And these are just some of the base numbers that they follow for inflation and what they're targeting. This dotted line here is where the target is, and you can see, as you can see, we have not reached that target, that 2% target. In fact, we missed the mark on seeing any interest rate cuts by the Fed because of these two little orange bars here you see at the very end here for February and March. We were anticipating to see rate cuts about this time. Just for reference, moving forward in the market report, May and June are typically our months where we see the most price appreciation in any given year. That's typical year over year appreciation. And then as the summer starts winding down, we see a deceleration of that price appreciation in the year. And we start seeing some pullbacks in prices. But with the way the Fed has outlined the need to cut that inflation, we're not, I don't want to say we're not going to see any price appreciation, but it's definitely going to throw the numbers off this year, especially if you have a bigger house that you're contemplating putting on the market. It may not go 100% according to plan. But I'll give you a fallback resource here. Hopefully that you agree is a great move if you have a larger house with a USDA, FHA, or a VA mortgage attached to it. Something that we've also been tracking is what builders are doing to deal with high inflation, pullback from consumers, and that is they're building more smaller homes. More than a third, 38% of builders say they built smaller homes in 2023, and more than a quarter are saying they plan to construct even smaller homes this year. Okay, this is all response to what the consumer is wanting, what the consumer is demanding. So, put that in the back of your mind. If you're whether you're a buyer or seller, where the demand is going to be for the remainder of 2024. And then again, here's where we see that trend in what builders are doing. We take a lot of cues from builders because builders put a lot of money behind their market research and what they're doing, what they're selling, what the consumer is thinking. They take a lot of polls to find out what they need to do in order to sell homes and respond accordingly. So if you're thinking about selling your home in San Antonio or anywhere for that matter, you definitely want to take your cues from what builders are doing. Builders are offering a lot of incentives. Builders are offering higher commissions. Builders are building the homes that people want right now. So we have to kind of craft our message no matter where our plans are around what the consumer wants. And right now, what the consumer wants, they want lower payments. They want less upkeep to deal with because of inflation and just maybe general needs. So got to craft everything we're doing around that. And speaking of crafting everything we're doing around that, this is the blog article. I'll leave a link in the description. I'm going to be updating this thing with a lot more information, but this talks about assumable mortgages. So if you are a seller, you're thinking about selling and you bought a home in 2020, 2021, you want to read this article. And you're going to start seeing some ads from me out there, off making this offer out there to handle assumable mortgages for you, because it is an advantage. If you are thinking about buying or selling, you definitely want to think about mortgage assumptions and where you might fit in with that, because it's a clear advantage. I'm not going to get into the whole thing on this video, but just understand that I wouldn't be offering it if I didn't think it was a clear advantage to any of my clients, customers. Heck, if you're using another realtor and they're not up on mortgage assumptions, you definitely want to open their eyes to that, because it is a clear advantage, in my opinion, to the consumer to think about assumable mortgages. So I won't say any more about that, and we'll get into the market report. Okay, so we are in April. Excuse me, we are in May, but all the data that I'm sharing with you is from the month of April, and this is everything that happened last month, and you can kind of take your cues from there for the remainder of May. So we're still in the seller's market, okay? Despite all the pain that we see in the market, and it's just perspective. We're used to a lot faster selling market. We have been for years. And so we're just seeing a continuation of that. Months of inventory, 3.87 months worth of inventory. That is almost a 5.5% increase in inventory from March through April. Okay, still that's a good amount. So if you're a buyer, you're seeing more inventory out there, more options. List to sold price ratio, 97.7%. So once they get it in the right price range, they're selling within less than 3% of the list price. Days on the market is down almost 11%. So if you're a seller and you're priced right, this is about what your target number of days on the market should be looking like right now. And the median sold price for homes here in San Antonio is $299, and that is almost up 0.5% month over month. And then we see median estimated property values. This actually came down less than it's almost zero, but less than 0.1%. So property values are really relatively flat. Again, remember I said May, June is when we typically see the highest acceleration. We're not seeing that right now, primarily because of the interest rate pause. They haven't cut them, but they haven't raised them either. So that's what we're left with. 12-month change in estimated property value, plus 5.1%. Okay, that's over 12 months though. And new listings, new homes on the market being sold. These are the newest listings. The median list price, or in the middle, $315,000. That's up 4.1% month over month. Number of properties that came in that new listing category, 2,715. That's up 2.1%. With the median square footage price, $174 a square foot, and the median living area square footage, 1,880 square feet. And you can expect this, I think, will continue to go up as we do see some of our larger family homes go on the market. People start moving and leaving or whatever. School's going to be out real soon here, so I think that'll continue to go up a little bit. Active listings, these are the homes that have already gone through that first 10 days of being on the market. Median list price right at $315. So the new homes and the active listings at $315. We'll see how that goes moving forward. Number of properties, again, that's 6,539 properties that are active. So they haven't been sold. They're still available. They're still on the market. Median days on the market, 54. median price per square foot 175, and median living area square footage 1,878 square feet. So real similar, a lot of similarities between the new listings on the market and the active listings on the market. New pending listings. These are listings that are now under contract for the month of April. They just went under contract, and the typical price for those new pending listings is $304,282. So about a $11,000 difference from the new listings and active listings to the new pending listings. And the number of properties in new pending status is down 16%. Yet the number of property is 1,638 properties. They sold faster. The median days on the market for these new pending listings sold faster at 34 days. That's down almost 20%. Price per square foot, $168 a square foot. And the median living area for these came in at 1,900 square feet. Pending listings, these are the leftovers from the previous month that were in pending status. They just didn't close out in the month before. They came in at $315,000. Number of properties in that pending status, 2,342 properties. And the median living area square footage, 1,950. And then homes sold in April, the median sold price came in at $299,000. That's just up about 0.5%. Number of properties sold there, 1,594. That's a almost 11% drop in number of properties sold in April versus the month before. And then finally, the supply of homes, again, 3.87 months worth of supply. Last month change, up 5.4% in supply of homes available to purchase. And then 12 months change is up 36.3%. So if you have any questions about this, feel free to reach out, leave a comment in the section, and I'll answer it for everybody. Again, you'll want to check out that mortgage assumption page that I brought to your attention. I'm going to be pushing that out a lot more. I think that's a clear advantage because folks that are selling or reselling homes right now, you got to start thinking creatively. You got to start putting the best possible options out there for the consumer. I can't tell you, I've been through the MLS and I've looked at so many homes that weren't offering a mortgage assumption. It's not good because it's a big advantage. If you have a house that is for sale at $300,000 and a buyer purchases that home at 7.25%, but they could have purchased that home and bought it for at a 3.5% interest rate, and they put down a big down payment on that 7.5. The math it's mind-boggling how good of a deal they passed up not doing a mortgage assumption. So you're going to see a lot more of that in the news, I think. And folks that didn't offer a mortgage assumption, you really mathematically can't cut the price enough to make up for not doing the mortgage assumption. So if you did cut the price, you lost a lot of money versus doing a mortgage assumption. So look for more information on that from me. Otherwise, I will see you guys on the next housing market report. And if you have any questions, drop it in the comments.